What's up everyone, welcome back to another trade breakdown, this time on Euro Yen, where we'll be looking at the trade that I took, which was based on structure, premium versus discount, supply and demand, liquidity, order flow, and our entry model, of course. So my name is Oscar Madsen, I'm a funded trader as well as a personal trading coach, and with these videos I'm trying to help you guys put together all of the confluences that we have in an actual trade. So let's get into it. Okay, so first off, I'm going to show you the trade so that you know what we're analyzing. So it is a short setup on Euro Yen. As you can see on the 1 hour, a 1 hour entry, perfect entry. Me, myself, I didn't get filled in this trade due to spread, but still it's a valid setup. So I'm going to explain it and why I took it. So let's start off with structure. As you can see on the weekly, we are bearish, with this being our swing low and this being our current swing high as well. So then going over to the daily, for me it is going to be the same swing due to this big move down. So this again is my swing high and this is going to be my swing low. Looking at the 4 hour, well, on the 4 hour we were bullish at that moment in time, but I was looking for a retracement because we know after we break structure we could see a retracement. So in my opinion, it was still valid to take a short setup. Okay, so that was quickly the structure, which we have checked off on the weekly, the daily, and also the 4 hour, because we could have a pullback as well. Why not the 1 hour? Well, because the 1 hour and the lower time frames I mostly use for my entry model and not to look at structure, liquidity, order flow, anything else. So this is purely 1 hour and the other confluences together. So on the weekly, we got structure, daily, we got structure, and 4 hour, we also have structure as well. So let's now go over to premium versus discount and let's see what it is. So looking at the weekly here, what can we see? Well, from the swing high in towards the swing low over here, we can see that we already tapped premium prices. So from here we could see to trade down lower in towards the swing low. On the daily it's going to be exactly the same because the swing break is the same as well as the swing high and the swing low. So the premium versus discount is also going to be the same. And as you can see, we've over here tapped premium prices, so we could move down lower, and then once again we tapped it again, so we could expect a reaction. On the 4 hour, well, what can we see? Well, we can see that at this moment in time, and let me use replay mode for this, well, that we still need to trade in towards the discount prices. So we broke structure, but we still could trade down lower in towards discount prices. And from here, we could then reverse up higher in towards the highs again. So that's basically premium versus discount. So we also quickly checked off premium versus discount on every single time frame again. On the weekly time frame, we tapped the premium prices as well as the daily time frame. And on the 4 hour, we could trade towards the discount prices. So 4 hour is also checked off. So we already have structure checked off as premium versus discount. Now we are going to take a look at supply and demand and see how we use this in our entry model. Okay, so on the weekly time frame, what can we see? Well, that we had a sell-off over here, this big candle, and then we moved up higher into towards highs, and from here we sold off. So the overall supply zone is going to be this overall supply, and as you can see, we have been trading in it for multiple times. So this is the refined one as well, but the overall supply zone is going to be this one. Why is this one refined? Well, because this was the point where we sold from, so then we just had a move up higher. What happened over here was internal, so this is also my refined supply. So going over to the daily, it is kind of the same, but then you can see we had this supply zone over here, and then we had this supply over here, which was then in control. And then of course you can see that from this supply zone we could expect a reaction down lower. So going over to the 4 hour, well, what do we see? Well, on the 4 hour, yes, we are inside demand at the moment, so we could for now still trade up higher. But at the moment that we broke this low, well, at that moment exactly, we had a supply zone that could push price down lower. So this was also the point where the trade became valid in order to take a short setup. So after breaking this, then we had supply in order to trade down lower. Towards what? Towards an open demand zone. So again, really easy. Supply and demand on every time frame has been checked off. Okay, so now that we checked off structure, premium versus discount, and supply and demand, because we had supply in a weekly time frame, supply on the daily time frame, and we had supply on a 4-hour time frame after we broke that low, and we could trade towards a demand zone that was still open on the 4-hour. So supply and demand is definitely checked off on all time frames. Now let's take a look at liquidity and how we use it in this trade. So as you can see over here, we grab liquidity above these highs on the weekly time frame, and as you might know, weekly highs and lows are strong points where we could expect a reaction from, so taking a short setup here is definitely nice to do. So after this liquidity grab, we could expect that move in towards the downside, as you can see. So on the daily, it is going to be the exact same liquidity. As you can see over here, this is all of the liquidity that we have taken out. So what do you then expect after taking liquidity above all of these highs? Well, to take some liquidity at the lows. Well, where is liquidity? Well, at these lows, right? But what is our first point to trade towards? Well, this internal liquidity point, right? So basically, if you see that we grab a point of liquidity, so a couple of highs, we take that out, right, with this move up, then what you want to do is take a short setup towards the nearest internal liquidity, because that's most of the time guaranteed to get taken out before actually moving up higher or just dropping down lower. So that's my tip for today, guys. Definitely the best tip that I can give. I use this in every single trade that I take. So yeah, make sure to use it. So on the 4-hour, it is going to be the same liquidity above this high as well, which we took out. And then as you can see, after that liquidity, what did we have? Well, we got the break in towards the downside. So after that break in towards the downside, well, then you could expect to trade down lower in towards what? Well, in towards that daily internal, which is also this 4-hour internal liquidity, and this perfectly aligns with this open demand zone which we just talked about. So a perfect point to trade towards, to either trade up higher or trade down lower. So again, liquidity has been checked off on all time frames, looking good for now. Okay, so we now checked off liquidity as well on all time frames. The weekly, because we grabbed weekly liquidity, it was the same liquidity that we grabbed on the daily as well as a 4-hour, and on the 4-hour and the daily we had liquidity to target as well. So perfection from liquidity wise, because we have weekly liquidity which is really strong. Where could we trade towards from that liquidity? Well, to some other daily and 4-hour internal liquidity. So that's actually perfection. Now let's take a look at order flow first off on the weekly time frame. So most of the time I don't use order flow on the weekly time frame unless it's very clear, such as this example on GBP CAD. As you can see, this over here is clearly bullish order flow, yeah. But on EURJPY, you can see that we're also kind of consolidating on the weekly, and I'm also going to say it on the daily as well. You can see we are just moving sideways. So on those higher time frames, you won't really have order flow. So going to the daily, let's see if we have order flow. So yeah, we do kind of have bullish order flow, as you can see over here. And you guys always hear me say, don't trade against the order flow, but this is where it is sometimes possible. So it's not the best, but let's just say we have bullish order flow, right? Nonetheless, we're just consolidating, right? We're just moving from the lows to the highs, to the lows, to the highs, and then possibly to the lows again. You know how it goes. But now we could say that we have bullish order flow and we could continue up higher. But as we just saw, we grabbed a lot of liquidity above the high, so we could expect to grab that internal liquidity. That's 100% what I'm expecting to get taken out. Well, if we take this out, did we break the order flow? No, we are still respecting the order flow, so you could still trade up higher. So because you grabbed so much liquidity, you could still take a short setup to the internal liquidity because you're still respecting the order flow, because from here you expect to trade up higher with the order flow. Well, on the 4 hour, clearly we had bullish order flow. So same as the daily, we had bullish order flow, but then you can see this demand, and then you had this imbalance candle, which was your demand. And then after breaking this high, this was your demand. But then after this low break, you also switched the order flow to bearish, and then you've bearish order flow on the 4 hour. So now this is your order flow, which is bearish, and we can also check that off on the 4 hour as well. So we have no order flow on the weekly. On the daily, we have bullish order flow completely, but we could still expect a move in towards that internal liquidity and then still respect the order flow. And on the 4 hour, we have bearish order flow, so gives us more confirmation to trade towards that internal liquidity. So we now also checked off order flow as well on every single time frame except the weekly, because we are consolidating. But basically order flow was on the daily. Why on the daily? Because we are bullish on the daily, but we could still expect a little pullback in towards the demand zone, the latest order flow, and from that internal liquidity, which I explained, we could then again move up higher. So we're not trading against the order flow. So on the daily it is good, and on the 4 hour we had bearish order flow, so this was also great. So we have our structure, which was great, premium versus discount, supply and demand, liquidity, and order flow. And now what I do, I scale in towards a lower time frame, and I will explain why to the lower time frame and the reason why I didn't take it on a 4 hour in a second. But now we're going to go over our entry model and show you the actual trade. Okay, so why is my entry model this time not on the 4 hour but on the 1 hour? Well, that's because we do not have that much room in towards the downside, and we are trading counter trend. If you are trading counter trend, you want to have your position as small as possible, because if you take your swing positions, that's most likely going to not play out. Okay, so let's just see it like this. If this was your 4 hour setup, which was a clean entry, a clean stop loss placement, but your take profit is maximum on top of this liquidity, as you guys know or not, now you will know it. But we always target liquidity and not zones or demand zones. Why? Because after grabbing liquidity, you could already reverse without tapping the demand. So that's why we always set our take profit at liquidity and not at demand and supply zones. So now you have a 0.9 risk to reward, which is not great, or this is just not what I use for my trades. I try to use a 3 risk to reward. And as you can see, this is just not a good trade. Why is this not a good trade? Well, because our swing low is over here and we are swing bullish. So what do we expect? Well, to respect the swing low and trade up higher. Because we are swing bullish, we do not expect to break this low at all. So if our TP is under it, it's definitely not the best take profit that you can have. So then I went over to the 1 hour, and what did I do? Well, I looked for my entry. So we know that after breaking this low over here, we switched the order flow. So that was the exact moment where I wanted to look for shorts, right? So this was the 4 hour order flow switch bearish. And then what did I do? At that moment in time, I was looking for my entry. So what do I then see? Well, I can see that in the morning, we got this push up just before London, and we took some Asia liquidity. Okay, this is super important. Why? Because as you can see, this now is a buy before the sell. And what do we know what this is? This is a supply zone. So we have this supply zone, which I'm looking to go short from. And as you can see, this supply takes out that Asia liquidity. So most of the time, if a high is formed in the beginning of London session, well, then in my opinion or in my strategy, this is a really strong high. Also, because it grabbed liquidity, this is even more stronger. So that's why I placed my stop loss above this high, and I saw this as a safe high. Why? Let's just say seller stepped into the market over here after swiping this high. Well, where do sellers step in again? well, after swiping this liquidity, more sellers step into the market or big institutions. So I expect this to be respected and then just trade down lower. So then why is my entry on this point over here and not just on the overall supply zone? So normally it should 100% be on the overall supply zone. But if we take a look at our take profit, what do we see? My take profit is at the liquidity. Why at the liquidity? Well, because from the liquidity, we could see a retracement up higher in line with that 4-hour trend, right? So that's why my take profit is at the liquidity and not at the demand, for example, because from that liquidity, we could already reverse up higher. So I absolutely didn't want my TP to be lower than the liquidity point. So then where do you place your entry? Well, you just, from the supply zone, just move it higher and higher and higher until you have your risk to reward that you want. And then as you can see over here, we had 3 risk to reward, right? And then my entry came on this point, which you can see was an absolute perfection. And then as you can see, this trade also beautifully played out if you got entered and had nice spreads. So that was a trade. I hope you guys enjoyed it. I hope you guys learned from this as well. See you guys in the next one. Ciao.